Hi, Andrew Bell here, and it's great to be with you once again. Here we are only a couple of weeks away from spring, and I'm still wondering whether we're actually going to get our windy August, let alone a cold winter. It is certainly the most mild winter I've ever experienced in the Gold Coast in some 24 years, but it's been great for the real estate market. Now, a number of new reports out that really circulate around what is likely to happen to the real estate market in the time ahead. First up was from CoreLogic, that showed that in July, the capital city dwelling values rose 0.8% over the month. That was even the month that the election and the aftermath of the election surfaced. The same report showed that capital city dwelling values were 6.3% higher over the first 7 months of 2016. Of course, there were differences throughout the country, with the biggest increase in Sydney, where property values were up 9.1% year on year, whilst Darwin was down by 7.6%. But it clearly shows that the big player cities of Sydney, Melbourne and Brisbane are all very strong. Growth has eased from the previous year, where the combined capital city values rose 11.1%. But a more modest growth at these levels is desired and takes away the risk of the market peaking anytime soon because of unsustainability. In a second report, which also comes from CoreLogic, it shows that property prices in Australia, combined capital cities, have been growing for 50 consecutive months and are at record highs. Over those 50 months, prices have surged 38.3%, again on aggregate. There's no surprise that there are many throughout Australia who believe that this just cannot continue, and that correction must be somewhere on the horizon. Well, that takes me to another survey, which was the combined research again by CoreLogic and TEG Awards. This report found a significant paradox in the housing market, with the large majority of respondents indicating a willingness to buy a home at the very time that others are suggesting it may be vulnerable to a substantial correction. The survey found that 64% of recipients believe it was a good time to buy a dwelling, and that was up from 60% who felt that way a year ago. It was also the case that last year, 65% indicated they thought the housing values could be exposed to a downturn. It comes as no surprise that it was Sydney-based respondents that were the most concerned about or pessimistic about property values. They are certainly the market that has seen a significant larger increase than any other market in Australia. The paradox was, with a large proportion of survey respondents thinking it was a good time to buy a dwelling, that was surprising to see that almost 2/3 of people indicated that they thought dwelling values could suffer a correction. Figure that. Well, it certainly makes for interesting thinking. What do you think is the road ahead for the real estate market? I certainly think it's very geographic. Obviously, Sydney has gone through incredible rises and has the biggest risks associated with it. Yet, if you looked at Darwin or Perth, property values have actually declined. No risk of overheating there. Closer to home, Brisbane has been very measured in its property value growth. And on the Gold Coast, where largely we have been only recouping values that were lost throughout the global financial crisis, there's no risk on the Gold Coast of property values falling. I think what people are really facing now, whether it's first-home buyers or families or investors or indeed retirees, is in fact, what do you do with your money? What do you do with your cash? For most people, there are only three choices: money in the bank, money in shares, or money in real estate. We know that with the record low interest rates, you really get nothing for putting your money in the bank. It's certainly not working for you. It's simply a place to hold cash, and increasingly that's simply not good enough. With low growth economy and wobbly world economics, the stock market is as tricky as it's ever been. What is safe? What is risky? I'm actually going to get a yield. The stock market for most people requires a high level of sophistication, and you can't be assured of returns. How scary is it that you can have a CEO resign and share values fall by 30% plus? One minute you're the darling of the stock market, and the next minute some analyst has found a flaw, and down goes your share values. Most people understand real estate. Most people know that it's been the backbone of Australia's wealth for more than a century. Most people like the idea of owning the roof over their own head, and a lot of people like the fact that they can go and see their property, touch it, feel it. It's real. Everybody knows that you can rent your property out and receive a return. Right now, with interest rates at record lows in our country's history, there's never been a greater attraction to borrow money for that physical property purchase. With the forecast of interest rates remaining at record lows for a decade or more, it remains the preferred option for so many investors. What will limit price growth is simply affordability. Will people's salaries or income support the borrowings to pay the prices that markets are looking at? This means that perhaps certain sectors of every market will not see growth, yet affordable price ranges will see greater growth. From 40+ years in the real estate industry, this indeed is the most unique environment that we've ever been in. One of a kind. Looking forward, I believe the growth will slow in some of the stronger markets. In other markets where values have fallen, they'll see some stabilisation, and for some markets where growth has been very low, for example the Gold Coast, where we're only starting to see prices return to where they were back in 2007, we are now maintaining a sensible sub 10% growth per annum and have a couple of more years in it at least. Isn't hindsight wonderful? But we all can check in on those forecasts of me in a year or two's time. My last point is we still have 3 tables left for our Ray White Service Paradise Muscular Dystrophy Ball on the 3rd of September. It is going to be a fabulous night. 720 people booked in already. We'd love to have your company if you'd like to join us, and it's going to be one of the best social nights of the year here on the Gold Coast. So Lisa Carson, our ball coordinator's details on screen, so please give her a call and come along and join this great night. Well, that's it. Catch you in a fortnight's time. Stay safe.